Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Hope everyone had a fantastic trading day. Good afternoon, Davey. Afternoon, Patrick. Hey, hey, Waka Waka. It's evening time for Waka Waka. You think the market is betting that it's going to be positive? Strange that we haven't had a sell-off. Been up since last week every day. Green going to CPI smells fishy. Also, the junk squeeze continued. It dipped a little into the morning, but major junk squeeze. And also, half the NASDAQ gains were due to Apple. Remember, with the weighting of some of these mega caps, you can have a basket, a very small basket, drive things higher. Now, you got to go with the buy signals, why it was still in trailing mode today. What's the CPI take for tomorrow? I think it's going to come in above 8%, but I think anything that's a slight improvement is going to be celebrated. There also is getting it to be a substantial divergence with this rally and what note and bond yields are doing. So it's going to be interesting to see if those reconverge. Hello, George. Market is betting it's a low number. I think it's going to be hot and going to shock the market. You know, it's there. Even people are talking about, oh, 8% is a massive reduction. Inflation's taken care of. It's all absurd. I also retweeted something today, interesting research that if the lows from June were to hold, it would be the first time that only a PE of 18 called a market bottom in the bear market. So we shall have to see. By the way, and consumer inflation expectations coming in better than prior, but still running 5.7 tomorrow. What are we talking about? What are we talking about? We're talking about 7:30 a.m. Central Time. Core inflation, CPI, everything tomorrow. That's what everything's gonna be pivoting off. Forecast for the inflation rate year over year is dropping to 8.1 versus 8.5. CPI coming in forecast slightly better in terms of the absolute value, 295.53 versus 296.27. Core inflation still forecast to be 0.3, the same as previous, and the inflation rate month over month forecast to decline by 0.1% versus flat last month. So we are going to have to see. I mean, celebrating an inflation rate of anything above 8.8 as inflation is tame is ludicrous in my book, but the market's ludicrous anyways. What else we have? We got Red Book coming in right before the live stream. And that's really it for tomorrow. Let's take a look before we get to subscriber. Apple up bigly based off of the shocking thing that they just released a new iPhone and that the initial orders were strong. You know, the people who do the yearly upgrade cycle, not really worried about that. It'll be interesting to see how much it falls off since it's not that big an upgrade from the iPhone 13. So, but that was leading it. You had mega caps leading everything except for really Google today. Banks were strong. Oil, another continued rally in oil. With oil stocks still strong in the oil sector, still holding up, still in buy mode as I put out yesterday in the sector overview. So you can still look for oil and energy related stocks, not just oil related stocks, but energy related stocks still in buy mode. Where else? Did I refresh this earlier? Oh, great. Then I get an application error. Fantastic. Good. I hit refresh, before we come on. 41.14 is still zero gamma for the cash S&P. The futures are tracking that close enough. But where does it sit right now? Well, we'll jump back here. 41.36. So we're clearly in positive gamma mode. So any continued rally has a dampening effect. And yes, 92% for that 75 basis points. The market just shrugging off everything right now as if it's all baked in. Oracle was up slightly. I did not see if their earnings came out before I was prepping for the live stream. So that's what I will be looking at. Because it did trigger a double bottom, although be it very sloppy. Very, very sloppy. Let's see. Before we get to more comments, let me just say, and if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers and subscribers, you know exactly what to do. Coco saying the number is leaked. The number is not leaked. If so, I like that. What's the number? When PPI is hotter over several months, it means that it has yet to go into the system in the CPI. I don't think it's going to come in below 8. But even if it, it doesn't matter. It doesn't matter. Market's going to do what it's going to do. So we'll go through how I'm looking to play it. Good evening, Anissa. No, it was up on the iPhone orders, from their event last week, and then there was announced they had strong record, not record iPhone orders, but strong iPhone orders off their iPhone release last week. Yeah, Apple and Amazon moved the market. You had some stuff going. I mean, when Apple makes up, it's like 10% of even the NASDAQ. So it's big. I mean, you hear this was interesting. Here you go. This is from a tweet. But you can see, the amount of points in the NASDAQ. $1 move in Apple is 10 points of the NASDAQ. So, and Apple was up pretty substantially today. And then Microsoft one point, and that is almost 5 points. So you can see just the weighting. Look at even the weighting of the top 4. Apple, Microsoft, Amazon, Tesla. If you get a rally in those, per $1, you're looking at, let's add this up, 10 and a half, 5, that's roughly just over 15. Let's call it 22, 20, 24 points roughly for every $1 in the Apple, Microsoft, Amazon, and Tesla. So, each of those stocks rallies a bit. You have a pretty substantial rally in the NASDAQ and the S&P. Apple 7% of the S&P. What's dangerous, though, is once these mega caps, if and when they get hit again, this massive weighting from them, because it's market cap weighted in a very centralized group of stocks, can lead also as the rally goes up, a rollover. But also then besides that, you had some massive still short squeezing going on. Cycles at the top on the verge of rolling over. Let's see what else we have. So yeah, there you go, Waka Waka. You got Apple, Microsoft, Amazon, Tesla, big contributor to the market today. Huge contributor to the market, which that's not healthy in my book for the market. That is not very healthy for a long, sustainable market, and it wasn't healthy on the way up going into this, because if you look at this, Microsoft up 0.83 or 83 basis points, Apple up 385 basis points, Apple up 239 basis points, Tesla up 158 basis points. So right there was the majority of your up move in the NASDAQ for stocks. Peloton executive chairman and co-founder John Foley is leaving. Okay, here we go. Thank you, Waka Waka. Adjusted revenue, $11.45 billion, estimated $11.45. So the adjusted revenue, I wish we could just report on GAAP. Can't we just get to GAAP? Geez, I'm tired of these adjusted numbers. There's no point in even having a gap then. Let's see. Cloud server, interesting. ORCL. Yeah, good. It's definitely holding up post market after. This is why it was sloppy, but it still works. So up triggered today into the close. So gonna keep continuing to keep an eye. It was very, very close. This is the move that started with the candle bodies. This had to be within it, and it was very close, but it still counted. Now it's a little riskier because it cycles at the top, but it might get a pullback. So on a delayed entry, it would be on a pullback to about between 75.80 to about 76.80, anywhere in that, and a potential gap fill before on a pullback play on the patient play for that. Yeah, Apple and Amazon pumping today, huge percentage of the NASDAQ. That's what I'm talking about. That's why, you got to still trade it. Again, we had buy signals. And now today it's be trailing. Also, we do have, this is getting sloppy, doesn't have to remain, but we have a potential double top. There were lots of nice reversal signals. I think Sterling was tweeting them out on the Path Trading Twitter feed. There are lots of intraday reversals. I'm not going to go through all of that. They were on the Twitter feed, but there was double top, double bottom right in here. Another, this turned into a triple actually on the 5-minute. The 15-minute was just a flat. But we had a head and shoulders. This was a valid head and shoulders, which was interesting right here. Head and shoulders coming down, the rally back up, turned it into a little 15-minute double, then selling off. So there was some great trading today. There was some fantastic trading. The only thing I'm watching going in on for bearish mode is on at least a 1-hour close below 41.0525. And if it breaks now to below today's low, that would be a sell signal. And I'd be looking for a short signal based off of the 50 to 62 rotation zone entry. If we continue this rally on, and a rally overnight would probably invalidate that potential double. So that's why it's still a potential. But next target's 41.45, then major is 41.61. Looks like this is going to close and invalidate the possible impulsive wave count to the downside. So I'm going to be real interesting tomorrow if it does rally. If we close above 41.61, it's continued to trail a stop from the aggressive buy and then target virtually the 200. Getting closer and closer to overbought cycles at the top. We'll take a look at revising some more levels tomorrow, but this major is today's low, and before that would be this potential double top. If you're watching a breakdown play, if you're watching for a breakdown play before then, the two key things I'm watching is 41.30, then about 41.15. I cannot believe the market has rallied back all the way to a Jackson Hole candle with none of the problems solved. These are what you get in bear markets. Can't say it anymore. Again, it's where you get these sustained moves, and it's lots of it is that little handful of stocks and then the short squeeze. Peloton should go to zero. I think it'd get takeover at some point before it goes to zero, although if they don't resolve their stuff quickly. Where's that trading, by the way? I did not look at it today. And based off John Foley leaving, ooh, look at that. Nice little rally back. Nice little rally back. Once this gets down to about $4 or $3, it could be a nice takeover play. Let's take a look at the NAS. NAS Let me pull off some of these retracement levels for right now. NAS close into that 50 to 62.5 area, not yet invalidating the wave count on the NAS. 12.9 is the next level. And then above that, I'm focusing on 13,058. This is pretty easy. Pretty easy. This is looking to potentially invalidate it, but not yet invalidated. There's your double below 12,722. Before that, here's what I'm going to be keying off of overnight, and I will be paying attention to the overnight markets tonight. 12,822, and then with the rising rotation zone on the 4-hour or the 1-hour, which will be beyond that level by this evening, especially European session, I'm going to 12,762, then 12,722 for the breakdown if it does not get invalidated. And other than that, the same level still holding. This is why when you're already long, even if you've taken something off from an aggressive buy, you get to trail the stop and potentially do some add-ons at key reversal levels. Although we haven't had a lot of great reversals, no real great pullbacks to even do add-on trades. Dow tapping the 50% from this rundown. So Dow only recovering 50% of this move. Not yet invalidating the wave count on the Dow, 32,901. What am I watching for now? The next major level on the Dow is until before 32,900, and then 33,019 is key for the closing basis. And you can see the Dow. This technically, these are getting very sloppy for doubles, but I am mapping them out, and I would shift to the conservative. We just don't know if this high side's in yet. Why are they sloppy? Because you don't have a clear move up here. You have a lot of hitch patterns, but I'll still utilize them if we start getting selling pressure with those CPI numbers. 32,373, 32,554. You see the breakdown zone over here. 32,194 to 32,200 and 32,124. Russell closing in. Next is 1915, and then the major level is 1937. Anywhere in here, we'll watch for the rollover, especially with cycle tops. Everything's going to be off the CPI, though, tomorrow. Power move by the DAX today. Germany shrugging off everything. Coming right up in front of that 62.5. So pay attention on the DAX for any people watching that, because you can still trade the DAX if you're in the USA. And I know we have DAX traders who tune in this regularly, who trade from overseas. 13,454 tomorrow on a closing basis above there. Then you're looking roughly, probability-wise, to return to 13,800. Interesting notes. Another very bearish reaction. Look at this with this. This is why we watch for these rotation zones. So, I mean, I don't publicize the little short-term play, but these pokes into the daily rotation zone. Yes, we still do have a potential daily double bottom. Needs a daily close above 116.23. Lower probability since against the daily rotation zone, but constant selling pressure in the notes coming here. I'm still watching for it to tap the 87.5. What's interesting is if it comes down this 115.07 and holds there, that would not invalidate the double yet. So paying attention, I'm going to peek in. Where did our, I didn't check the yields. I was super busy this afternoon. Look at these yields. Oh, thing of beauty. Yields already hitting that 87.5. So we got the close right there back on the 31st of August above the 62.5, topping with that 87.5 right there. Also, still potential double top on the yields, but you need a daily close on a yield basis back below 3.021. So that has the yields already hit the probabilities. That doesn't mean they have to stop here, but that's the first key area I watch. Next major is anywhere in here. There was, interesting enough, there was no really good sub-level between the 87.5 and the 100% that tested out consistently. What I found works the best is utilizing harmonics within there. Okay? But and if you have end of clear paths tied in with harmonics. Yield curve still climbing in the channel up. We virtually, I'm just going to pull off this first target. We don't need the inverse head and shoulders anymore because we already have other targets on there. How is everyone doing today? Just wanted to say that again. Dollar index. Then we'll get to something else interesting. Pullback now. It is a buy signal confirmed on a close above today's daily high. After returning to a weekly rotation zone. So not only would it be a %B buy on the daily, it would then, if we got a close above here, it would be a weekly rotation back up from cycles at the bottom and approaching oversold conditions. Interesting enough, you can tell there was hedging going on today. Look, remember, the S&P up 127 basis points, NASDAQ up 146 basis points, Dow up 85, Russell up 144 basis points, yet the VIX up 474 basis points. What do you mean? The markets are up and the VIX is up? Lots of people buying some protection today, putting pressure on the VIX. People going in with this rally buying protection. That was very fascinating. Oh, not really fascinating. That is a rare event, but we had the gap up and it just trended higher all day. Now, also what I talked about, let me just point something out here. With the tick, because we got only a couple little instances of some stuff right off the open here. We were pressing up into the buy zone, did not into the European, which we got the pullback. We got one dip. Remember, I said, why do I have these key levels marked off? Because we overall had more buying pressure, but it was weak buying even with this rally. We only got one strong sell dip that was just going into the European close. Other than that, there was sustainable, slightly more buying pressure, but balanced today on the tick, which was interesting because this rally was really concentrated. Crude. Hope I'm not boring people. Going over a bunch of different stuff that caught my eye. Crude still, we get the rollover play on a move towards below today's low. Cycles still are edging up, so we might see some more consolidation. The key area, I can't really get into more sustainable bullish mode until it gets a close above 91.50. I am watching with waning momentum up here for this oil move to peter out. But there's no fantastic topping signal yet. The early warning sign is a breaking down below about 87. We'll get to some more comments in a second. Natty gas, not much going on there. Just a little. This is a very aggressive buy signal for a return to about 850 to about 895. Silver, nice break the upside. Also silver, by the way, I don't have it updated on here. Silver closing above the 62.5, so I'm going to be watching for it to return to 2043 at least. Japanese yen, a nice little inside pausing bar, but nothing else to do right there. Euro tried to spike up, still closing within the rotation zone. We'll really see how this reacts, but I can't go for any short things until it gets below 10080. Bitcoin with the continued, I'll call it risk on assets, continue to rally, watching that 22,706 area. It would be a rollover sell if we did close tomorrow below today's low. Tesla. This, even though it was up $1.58, pretty weak sauce for Tesla. Pretty uneventful, by the way, an aggressive sell on a breakdown below today's low. Other than that, the same levels are still holding up. 308.38 tomorrow, and still that cluster 311.59 to 313.94, with the harmonic coming in at 313.12. Hey Nas, how you doing? No, sorry, I forgot to take a comment off. I have to set those to expire. I have to fix that. Hey, Chris. What the money, man? Hope I'm not too late for the show. Got my pen and pad. You were not too late, Chris. September's not over, Coco. So you can't say that. It could. You could get a rip your face off rally. September could theoretically be the strongest month of the year. Anything can happen. You got to play the probabilities. September's still technically the weakest. And it's not over yet. We're not even halfway through September yet. So, let's see. We already went through all of this. Hey, John. John, PCI, you mean PCI? Where is, I'm trying to, PCI. What does PCI stand for? I mean, tomorrow we have the CPI. Maybe that was just a little dyslexic. Let me check in at the spiders and the... Well, the spiders followed through, hitting the second target and closing pretty much at the 50% harmonic. Remember, anything in here is a rollover zone. Next target, if it does continue to rally tomorrow, would be 413 and then 416. Do I see a SPY going to 423 only on a close above 416.16? And then it would be 424.40 to 426.50 would be my next targets. So those are your targets, the upside for the spiders. If we do start rolling over, we have the gap trade for tomorrow. If it starts weakness, the Qs, still only the first target hit. Second target, 311.75 roughly, and then 314.55 hitting this breakdown zone. Let me move out. So that's it. That's it on the Qs and the spiders. Waka Waka doesn't think this is boring. Well, I got one vote for not boring. All right, Waka Waka with the breaking news. Twitter lost a key data center that went offline due to extreme heat wave in California. Another outage elsewhere could result in service going dark for some users. Oh, well. Now, how long till we see the tweets saying, if that happens, it's a material adverse event and the merger's got to fall through? How long till we see that going through? Oh, I love this. It's hysterical. What's this? Oh dear, an iOS 16 bug? There was an error, multiple iPhone users getting an error whilst trying to update the app from the App Store. Sell Apple. Sell it after hours. Market's going to crash. I didn't update. Oh. A couple weeks back, you said your long-term buy signals triggered. What's your opinion on that now? I actually talked about it in the... They're still in short mode from their latest sell. And everything now I'm going off is this short-term harmonic key levels. So the next thing I'm watching for continued, because again, my short-term signals and then long-term signals. The long-term signals are still sells. Mike, what do you think about Polestar? The stock has been taken up on the woodshed recently, but it's an EV from the Volvo Performance Division. Junk or gem? I honestly have not been following it. I think long term it will do well. It just matters. That was from way back when, from that little IPO. It just matters on the valuation. So that's what's going to be key. And it's still technically negative. So I'm watching for a more substantial. I think it's still slightly overvalued. I will be watching it on the next downturn play. We need to get some cheaper valuations, and then I will be more interested in it. Sterling, you contributed to the Twitter feed. You don't have to contribute every day. You're busy at work. Just thank you for being here. I don't think it's junk, Ted. I just think it needs to get some proper valuations, and then it could be an interesting longer-term play at some point. I think it's still got to cheapen up a bit. So, and this would be just another rally before a rollover play. It's not junk. I've heard some good things about Polestars, but the stock is not junk. It's needs to get better valuations. We need a Powell press conference where he comes out yelling and turning over the tables. It's not going to matter. The market's shrugging off everything with the market's in still shrug off mode. I actually find this fascinating because of there's so many, even on Wall Street, there's so many, even senior traders that started trading after the Fed's been always in the market. And it's still the Fed's gonna flinch. Everybody's used to high PE ratios. A lot of people there hasn't really been a bear market since the Fed. We had that little reaction back in the taper tantrum. But that's the COVID. We had this little reaction from the taper tantrum, but most traders trading now have not been through a bear market and expect valuations to be high. They make fun of value stocks. They think PE ratios of 18 are cheap, which they're historically not cheap. They think the Fed's going to flinch. So it's going to just be interesting market conditions until it's not. All right. I think EVs are super overpriced, and thanks to Tesla, everyone thinks EVs are worth hundreds of trillions. That is true. That is true. Lots of EV stocks are way overvalued. So funny enough is there's lots of traditional automakers that are verging on decent to undervalued, but they're all shrugged off because people would rather pay for a stock trading at 100 times earnings than think that even a traditional car maker that's rolling out EVs is worth paying for. That's what's so funny. But that's the markets we're in still. So you just got to trade what is. Remember, it's what's tough in these markets. You got to trade what is, not what you think. Trade what is, not what you think. I wanted to see where I did not look at ARK today. Surprising enough, I don't look at ARK every minute of the day. Just wanted to see if it got back. It hasn't even got back to that 50% mark, although that's a pretty decent rally for ARK. All right. I think that's about it. All right, everyone go long till the 200 day. Is that your call now, George? Going long till the 200? Well, the 200 in the NASDAQ would wipe out the whole decline since mid-August. We'd be right back there. And by the way, that wouldn't be a double top even. The S&P would just take it back to roughly that 87.5. Where would the Dow take it to? The 75 level. All right, I'm going to wrap this up soon. Here's the, by the way, Apple. Let me reverse this real quick for all those Apple longs coming back to that key trend line. I am watching now. We hit that 50% level from this sell-off. I'm watching anywhere for 164.42 to 167.46 for a possible topping pattern in here. With Apple, especially with cycles at the top, which we get a short-term topping pattern in there, would be interesting as a market drag. Yes, go gadget comeback. So George is with go gadget mode. All right, thank you everybody for watching. Let me just peek in at Oracle. I keep saying let me just peek in. I'm just curious. Yep, still holding up. So no selling after earnings post market. All right. Look at inverse head and shoulders on the weekly on. Well, this is not, if you're trying to say this is, it would not be. If you're trying to say this is, that's not inverse head and shoulders that we would trade. So anybody pointing that out on other streams or other things, it's not. Yeah, it might. It's not at this. It might actually, though. Hold on. I might be standing corrected. It depends where it breaks. Yeah, it might be actually. You are correct. If that's the one, if this is the one, shoulder, head, shoulder here, that is not. This would be with your two targets of 15,583, 16,156. So that would technically be. Not this one, though. Not shoulder, head, shoulder. You cannot trade it the other way. So this cannot be traded as a head and shoulders. Yeah, I mean inverse head and shoulders. That doesn't work. The other one technically does work if it's triggered in the future, where it breaks the neckline. You're welcome, AP's World. With that, I will chat with every. Well, Coco, if he said an inverse head and shoulders, that would have to be a bottoming pattern. Inverse is a bottoming. A head and shoulders top is a topping pattern. Technically, if you hit all three targets, but the only probable targets are the first and second, which would take it close to the all-time high. And you also have to keep in mind, remember where the 62.5 is. So we'd also get a warning sign at 14,030. 14,030. That's where that, I just had to adjust that red line a hair. That would be also a close above that, would then also take it to that same area. All right. Now I'm finally wrapping it up. Everyone have a great night. I will be back on tomorrow at 8 a.m. after the uh, key number, the CPI number, not the PCI number. With that, talk to everyone later. Bye for now.